I'm Alex Tapscott. I am here in Toronto, where I was born and raised. Terrific, wonderful city, and in my mind, one of the places where crypto and Web3 is really happening. I started my career in investment banking. 10 years ago, I learned about Bitcoin before the word blockchain entered the vernacular and basically became convinced it was the start of something really important. And I quit my job. And since then, I've done lots of different things. I'm probably most well known for having written a couple of best-selling books. One of them is called Blockchain Revolution, which, according to our publisher, is the best-selling book on the topic. It's been translated into 19 languages and has sold more than 500,000 copies worldwide. My most recent book is called Web3, Charting the Internet's Next Economic and Cultural Frontier. Came out in September of last year, was instantly a Wall Street Journal and Globe and Mail bestseller, and it too will be translated into several languages, including Chinese, Korean, Thai, Turkish, Portuguese, and a bunch of others. I'm here kind of in my own personal capacity, but I'm also a portfolio manager at Ninepoint Partners and the managing director of the Digital Asset Group. Ninepoint's an investment management firm with about $7-8 billion of assets under management and contract, and I head up this innovative group within the company. Well, I've been very focused my whole time in this space on how Web3 technologies are going to transform different industries. And the thing I'm most interested in remains financial services. Financial services is not just some industry. It's kind of like the cardiovascular system for the global economy. And money and assets is the lifeblood. And really, it's essential to the working of all industries in the whole global economy. And I think that financial services is about to be completely reinvented. And I think it's going to look virtually unrecognizable in several years. We're already starting to see how blockchain technology and crypto is being used to transform how we move money with stablecoins, how we develop and fund new ventures, how we manage risk with prediction markets. We're seeing custody solutions emerging as a new way for people to store and move value. And we're seeing the globalization of this technology and of the financial system as a result of blockchain. So that's the thing I just remain mostly fascinated with. But there's plenty of other areas that I think are incredibly interesting. I think decentralized physical infrastructure is hitting an inflection point in the next little while, where creating decentralized networks for computer storage, telephony, and other essential infrastructure is really going to start to hit the mainstream. And it's something we need. We're in an era where the computing demands of AI are very significant, and we need to harness all the resources that we can in order to see that revolution through. So there's lots to be excited about. Hard to pick just one or two, but those are the two things I'm thinking about these days. I've long maintained that crypto and blockchain is nonpartisan, and I believe that to this day. Without commenting on the election or any particular party, I actually have a lot of hope that in the next year or two, we're going to see the emergence of a new consensus that this technology is something like all technologies, which sure, there should be some regulations. And in fact, there should be government policy because we need to create a framework and a roadmap to develop this technology. But this is something that doesn't belong to any one single political party or any one single ideology. This is a technology toolkit. It can be used for good and for bad, but it can be used by anybody. And we need to ensure that we don't forget that when faced with, elections and other political hot button issues. I think we can lose sight of that. And that's the thing I'm focused on. Well, by almost any measure, the launch of Bitcoin ETFs has been the most successful ETF launch in history. In the past several months, they've gathered, I think, around 17 billion net US dollars. And to put that in perspective, BlackRock has said that 25% of the growth of its ETF business this year has come from IBIT, its Bitcoin ETF. And for Fidelity, apparently it's even higher than that. So clearly there's a massive amount of market demand from investors for exposure to this asset class. And I think that's interesting. And I think that ETFs are, in a way, a form of financial technology. They make it easier for investors to gain exposure to assets they couldn't otherwise own. But what's more interesting to me is how these companies are now understanding the potential of the technology and are now implementing it in other parts of their business. So, for example, BlackRock's got its BUIDL, build fund, which is an on-chain product that allows investors to get exposure to US treasuries, and also companies like Franklin Templeton, which, for example, run full nodes on 12 different blockchains, right? So it'd be kind of hard to believe that companies with that kind of pedigree and that kind of history would be doing so much work on chain, but that's where we're at. And I think that's the thing that most excites me. Well, I think that probably we're not going to see single asset crypto ETFs in the US anytime soon. And I don't mean never. I just think it's probably going to take a little bit of time. I think what would be much more interesting is if we could find ways for mainstream investors to get easier access to this asset class. And that's where we need, well-known, trusted institutions and companies that operate in a regulated environment and that people can use. I think a lot of what makes Web3 interesting is the idea of self-custody and doing transactions on chain. But in my view, in the same way that a web browser kind of acts as a gateway to the internet, I think of centralized exchanges almost as acting as a gateway to the world of digital assets in Web3. If you think of it this way, think of the Web3 as a highway and all this assets, all this money flowing up and down this highway. If you believe, like I do, that most assets are going to be tokenized, are going to settle on chain, whether it's securities or bonds or other real world assets, you're going to need some pretty thick pipes to get that money on chain, right? You're going to need what are known as on-ramps and off-ramps. And I think that being in that position where you're taking advantage of on-ramps and building those kinds of platforms is a good place to be. Well, the future of crypto payments is transaction settling in real time on chain for low or no fees using stable coins or other real world backed assets. I think that's where we're headed. I think it's obvious from the trend line. There's over 25 trillion of stable coins that have stablecoin volumes that have settled on chain since the launch of that asset class, which I think is frankly quite remarkable. And we're at a point where stablecoin values are almost at an all-time high. So I just think that's where we're headed. Well, the problem is that the stablecoins exist in a regulatory gray area. And I think that we need to clarify the rules for this asset class. In my opinion, stablecoins are a payments tool. They're a payments technology. They're not a security. Nobody buys USDC with the expectation of generating a profit from the efforts of others, right? Which is a typical definition for a security. So we need to clarify those rules to make it easier for businesses to integrate stablecoins, for companies to start building in and around that ecosystem. And we're just not there yet. The landscape is very different depending on where you are in the world or who you're talking to. I mean, if you want to talk really broadly about financial institutions, a lot of central banks are financial institutions, and some of them are openly hostile to this whole thing. I was on a panel in Saudi Arabia with the governor of the Bank of Pakistan, and at the time they were contemplating a ban on all digital assets. And he said the big reason was what's known as dollarization, the idea that people will start substituting crypto for the local currency, and that will cause the local currency to lose value. So that's one end of the spectrum. Certain institutions that want to ban it outright. And at the other end of the spectrum are big banks, but mostly big asset managers that are really embracing this. And I think, if you look at some of the big companies in the US, as I mentioned, Fidelity, Digital Assets, BlackRock, and others, this isn't just an opportunity to make a quick buck on a new ETF product in a hot market. They're actually thinking deeply about how to integrate this technology into their business. So it really, really depends. In Canada, there's nothing going on really in the big banks and the big financial institutions. They're not hostile. They're sort of indifferent. And I think that is something that indifference is something that they embrace at their own peril, honestly, because sometimes it's hard to realize that you're standing on a burning platform where the risk of, jumping off, doing something different is actually less than the risk of staying put. And I think a lot of big financial institutions and companies don't realize it, but they're all standing on a burning platform and they've got to change their approach. Otherwise they risk, losing it all. No, I just want people to know that if you're interested in this technology, whether you're brand new to it or you're an OG, check out my new book, Web3, Charting the Internet's Next Economic and Cultural Frontier. There's something for everyone. I say, even the hardiest frontiers people need need a pocket guide. And I hope that with some humility, my book proves to be a useful resource.